Good morning once again, and welcome to the Haven Financial Group radio show. We appreciate you listening. Feel free to give us a call, 612-504-8400, havenfinancialgroup.com. We had some great classes, well-attended classes this week. Maximize Social Security and tax. We teach investment classes, Medicare Made Simple, legacy planning with wills and trusts, etc., and a variety of other classes. Go to our website. We'd love to have you, open to the public. We're always providing materials, and we think education is the potential for power. It's, of course, what we do with it that matters. So, again, education's always been our focus, and it's not going to stop anytime soon, that's for sure. Kim, at the beginning, you mentioned daylight savings time springing forward. I hope everybody did that going into today. Otherwise, they might have missed the show.
I hope they did too. The beauty of this is that at this stage of the game, everything's so digital that the clocks just move for you, right, Larry? We
That is true.
We do sort of stay on schedule, whether we want to or not. But I would imagine a lot of people are short an hour of sleep this morning, so we appreciate you being here with us. We're talking about questions that you would want to address associated with your retirement. There are a lot of questions. And certainly we can't answer all those questions this morning, but we do want to try to answer a few. And if you have more, and I'm sure you do, give the folks at Haven Financial Group a call, 612-504-8400. Let's talk about putting together a retirement plan that can weather turbulence in the markets. Larry, you have always said that being in the markets, when you're in retirement, it doesn't mean you can't be in the market, but you certainly want to be prepared a little bit more than maybe when you were in your 40s, your 30s, when you could weather storms a little better.
Yeah, your retirement strategy isn't necessarily about how much money can you make, buying low, selling high, timing the market, short-term versus long-term investments, et cetera, et cetera. It's really about, I said it, mailbox money, covering those monthly costs. And again, the element of time, how close are you to retirement? If you're a long ways from retirement or younger, hey, risk in the portfolio is recommended and suggested because your timeline is much longer. But being closer to retirement or in retirement, volatility really matters. It really does. When you have all that exposure to the market, there's going to be fluctuations, the bulls and the bears, the ups and the downs. It's what happens with the market. It's always been this way and will always be this way. And if you have too much exposure, and you can really have some financial instability, especially some of these market downturns. I did this back in the 99 to 2001. We had a market correction. For many of us, it didn't matter because we were all that much younger. And then 07, 09, I remember exactly where I was. The market crash, your 401k became a 201k. For us that were a long ways from retirement, it really didn't matter. In fact, we created wealth in that time because now we're buying low, and again, we're not going to sell for a long time. I remember the Star Tribune back in 2000, and that time, 3 out of 5 seniors had to go back to work or stay in the workforce longer. That's referring to those that were retiring or close to retirement. Their retirement was turned upside down. For almost 14 straight years, we had a perfect stock market. Young advisor getting in the industry, well, this job is easy. The market only goes up. How about that? This is easy. You just wait. And of course, we had COVID. It went down. It came back. 2022, we had a big market correction. And people were going, oh, my goodness, I can't believe how far the market's down. I couldn't believe it was up for 14 straight years. We got spoiled. Now, that was good. But the question I ask is we ask in the investment team with folks we sit down with, is this the decade that you're going to be retiring? We are in 2026. What's the rest of this decade going to look like for the stock market? I think the U.S. economy is still strong. I'm still optimistic, but we know that the market goes up and it goes down. Could there be a market correction this decade, the decade you're going to retire? I hope you've stress tested that portfolio to make sure you're minimizing risk rather than maximizing the risk and possibly decimating the timing of your retirement. And that's really what we do at Haven Financial Group. And we think it's so important. We're not against the market. We're not. But we do tend to see things a little more conservatively And the question should always be, what's your willingness for risk? What's the need for risk? And what's your ability to take risk? And we have newer clients that were in this week. They've done a great job planning for retirement. Um, they knew how much risk they were taking. They minimized it a couple years ago. They were aware of what they were doing, and most people are unaware until all of a sudden they see this big
Right.
negative number on their
Right,
statement.
absolutely. In fact, I am sure that when you sit down with people who are putting together their retirement portfolio, you talk about the psychological part of this and where they need to be just to be able to sleep at night, right?
They call it sleep insurance. Technically, we hope everybody sleeps good at night, but the reality is we don't necessarily, and this isn't insensitive, we don't necessarily care how good you sleep. We do, but at the end of the day, we care of when you wake up and the market's down that you don't call doing and make
Mm.
some irrational decision. Get me out, give me the cash, and those decisions can be very timely and can really really cost you if you don't think of it. I say the element of time. In one of the classes I teach, we can draw $1 million portfolio, stress that out over 30, 35 years like we do for our Monte Carlo projections, and sequence of return risk is real. When the markets are good, human nature, greed, oh, everything's rosy. But if you take two individuals over with the same amount of money, the same returns, inflation, everything, and the first 10 years the market's way up, and then the next 20 years it's way down, is way different than if you invert them and change it the other way. The numbers are unbelievable. What does the market do in the first 10 years or the last 10 years? And if you invert them, the numbers completely
Sure,
change.
absolutely. So let's talk about, how obviously you do what you just said, you stress test people, but how do you make decisions or help people make decisions about their market exposure when they come in an effort to protect them from what could be volatility?
Well, our proprietary process starts with everybody we sit down with, whether you know us, don't know us, come to my class, listen to me on the radio or the team. Our discovery process, get to know you, ask questions, take a lot of notes. What's your motivation? What are your goals, objectives, et cetera, et cetera. And we ask a lot of questions that many times people said, nobody's ever asked me that before. Well, how can your advisor you're currently with not ask you something that pertinent to your retirement? I'll never understand it. But then we'll get an idea and we'll come up with a strategy. What's your comfort level? Well, is it on a scale from 1 to a 10? Is that a 7? Is it a 2? Well, if it's a 5 and you're at a 9, probably need to make some changes. The problem is most people don't know how much risk they're taking. Some do. And I applaud that because there's an awareness and understanding. I would say 80% have no
Mhm.
idea until again something negative happens. Oh my goodness, I can't believe this has happened. So how about we address that up front, continue to have a conversation because life's calendar doesn't always cooperate with our calendar, timing of things, ill-advised expenses we didn't know about. And let's not forget probably one of the most important parts of retirement is consistent income. Your social security, do you have a pension? Is your income coming from a resource like the market that's volatile, going up and down, or is it consistent? And this is where you can get into annuities if it's appropriate for income or not. And I'm not going to touch on that much, but I do teach a class a couple times a year, the truth about annuities, and they can be used for generating guaranteed income. Not for everybody, because again, you have to match the solution with the problem, and that's a lot of what we
Mhm.
do. We had a couple that was in here last week, and great job planning for retirement. I won't get in the numbers. The money numbers don't matter. It's all relative. But they had two variable annuities for a big chunk of their retirement at 3.5% in fees with income riders they'll never use. In fact, they don't need more income because they already have a tax problem. So here we look at this and go, whoever did this, how did they think that this is a good solution to a problem that doesn't exist? So you got to make sure that you know, you're going through the weeds and understanding whatever decisions you're making. And that starts with the education. That starts with our process. And we want people, again, to come to know, oh, yeah, that's why I did this. I did it because my risk was too high. I did it because I don't have enough guaranteed income. I did it because, not because Larry and Haven or my advisor said I should do it. It's because it makes complete sense. And, you know, you should have a budget too. We might talk more about this, but the budget, a good, accurate budget can lead to consistency and actionable spending plan. What do you need? What kind of income do you need for those needs? And then what kind of income do you need for those wants? Those are really key things. And do you want a lifestyle? Just this week, this couple, great job. They wanted $35,000 a year in their budget for the next 10 years because they want to travel and enjoy time together in those go-go years. We put it right into their plan. Was it sustainable? Absolutely it was. Would it be for everybody? No, because not everybody's been as good a saver as they have. So again, match the solution with your potential problems, and you can avoid many of these problems.
All right, so we hope that maybe we're striking a chord with some of you listening. And if that's the case, then you're going to want to partner up with our friends here at Haven Financial Group, or at least give them a call, sit down, free consultation, talk with them about what some of your goals are. Talk to them about how much exposure you'd really like to have in the market, if you'd like to have any at all, and what kind of measures that the folks at Haven suggest you take to make you comfortable and sleep at night. 612-504-8400 is the number. That's how you reach the folks. Tell them that you heard us here on the radio and you'd like to come in to sit down and talk about your portfolio. Again, it's 612-504-8400. Coming up next, you heard Larry say it just a bit ago, but he loves a good Roth, and we're going to talk about that on the other side of the break. You're listening to the Haven Financial Group Radio Show.